This is back roads of Illinois server to farmers and ranchers in central Illinois in the Midwest. This is back roads of Illinois server to farmers and ranchers in central Illinois in the Midwest. We're glad you're here on today for your ag news and information. I'm Cesar Delgado. World supply and demand report was bullish. However, we will ask many questions about the yields estimates from last couple weeks ago by the Department of Agriculture. He was the chief economist for the USDA, Seth Meyers from the University of Missouri. The grains markets are quiet since the January report after the numbers were coming in from the Department of Agriculture. We were talking about technical aspects on the grains and livestock with Carl Selterz from Conus, and he is a Michigan cowboy. This is back roads of Illinois. World supply and demand report was bullish. However, we will ask many questions about the yields estimates from last couple weeks ago by the Department of Agriculture. He was the chief economist for the USDA, Seth Meyers from the University of Missouri. Hi, Dr. Meyers. What an honor to have you on the show for today. And how are you?
I'm good. I am happy to be back in the Midwest, taking up my job on the faculty at the University of Missouri once again. So I get the opportunity to take some of my market and policy experience in DC and bring it to the classroom and to bring it to the Food and Agricultural Policy Research Institute's program of work, where we inform policymakers at the state and national level about the implications of ag policy proposals. So I haven't gone far from all the things that were important in DC. I'm just bringing them back to the Midwest with me.
Good to hear that. Dr. Myers, let's discuss about the corn yield on the world supply and demand report on January 12th from the Department of Agriculture. Okay, why people are concerned about the corn yield from the report?
Yeah, so if okay, this is kind of a detailed answer, but we can pull any part of this apart that you want. But I don't think it's just yield. Yield absolutely important in this, but also the shift over the season to increased acreage really added overall production, where the January 12th report gave us more than 17 billion bushels. So I think we've kind of got to go back and look at the evolution of this 17 billion bushel number, both its yield and its area component. And I think we got to go all the way back to the March intentions report and I think I'm assuming we're talking specifically about corn here. We go back all the way to March prospective plantings where farmers kind of give their signal about what they intend to do. And you got somewhere around 95 million acres of corn. And then you see, I think, which was the most critical report, was the June acreage report. Now, the difference between March and June is March is asking farmers, what will you do? And then June really looks and says, hey, farmers, you've mostly got your area planted. What does that area look like? And it was basically in June confirmatory of intentions. But I think if we look back, we can say that the June acreage report was a big miss and set us up for the growth in production that Nash reported in subsequent months. Now, a reminder that the World Agricultural Supply and Demand Estimates report will take whatever data NASS provides and then adds to it. So when you mention the WASDE report in particular, a lot of the changes in production are driven by changes from the National Agricultural Statistics Service, which is the statistical agency in USDA, and the folks that put together the WASDE report implement that data. So I think when you look at that, the key element here is June was a miss in terms of acreage. And that set it up. So then in August, you had both an increase in acres because the June acreage report was a miss, and then you add to that that the yield was a record-breaking 188.8 at that time. And please interrupt me if you want me to stop at any point. So when you get to August,
What is your concern about the corn yield? It's 186. Or what do you feel about it, Dr. Meyers?
okay, so I actually think that the yield is probably at this point pretty good. That yield is it was clearly above trend. Yes, there was some concerns about how the crop finished, but the yield is probably not bad at 186. That's probably not that far off. You got to remember that more information comes in as the year goes along. And eventually, what NASS does is it asks farmers what their yields were. And so, largely, they start out with doing field level surveys, asking farmers what they think it's going to make, and they eventually go to what farmers say it's going to make. And so, I don't think 186 is probably that far off from reality. Okay. Again, I think the big shock to the market was the number of acres of corn that we ended up with and the big miss in the June acreage report. And that is really what has given us the big increase in supply. So again, I don't necessarily think that 17 billion bushels is probably that far off the mark. But I think how we got there has been the real shock to the market that has made producers uncomfortable.
Of course, wait and see. We can do.
Well, and again, the because we don't have in soybeans, when we look at the information, we'll be able to get other observational points which will tell us if we had the crop size correct, because we track all the bushels through crush. But in corn, feed and residual is such a big element of this that there won't be much of a change in production. We'll just have to observe and get a feel for how stocks look throughout the growing season. But again, I think most of the challenge and most of the anxiety this year is a result of the miss on what June acres were. Adding so many acres first to planted area, and then in January, upping the number of harvested acres. I think also a function of the miss in June really puts this out there. That to me, that's what's producing the anxiety is both we have large acreage and then we just keep adding to it in September and then in January, the number of harvested acres that we have on top of an above trend yield.
Of course. You know that the grains markets are not satisfied with farmers in rural communities in the Midwest. Do you have any concerns about the prices for corn and beans, wheat, cotton too?
Yeah, so concerns. I think clearly we're going through a period of very tight margins for producers, and it's across the board, as you mentioned, corn, beans, wheat, cotton, rice. These are all areas where we have pretty narrow margins. About 2 years ago, when I was giving my speech in Washington, D.C. at the Ag Outlook Forum, I mentioned my concern about how quickly, at that time, we were coming off a couple good years. My concern was how quickly margins were narrowing. We are now strongly in that environment. I apologize that I do not have information for you.
What is your thoughts on the cattle expansion with Tyson plant in Central Plains was closed? Could you tell us about the outlook on cattle markets?
Yeah, so I think importantly, your question's a very well timed one. We got a key piece of information coming out on the 30th, which is our twice a year, which is USDA's twice a year cattle report. And this is kind of an underlying report which tells us where in the cattle cycle we are at. Um, I think despite the fact that if we looked and we said, okay, what is the profit margin for cow-calf production right now, and that profitability for cow-calf operators is quite good, I still don't see an overwhelming enthusiasm to expand and turn the cycle in the cattle herd. So I am unsure if Friday's report will show us a turn in the national cattle cycle. When you talk specifically about the Tyson plant, I think there's a couple you raise a couple good points here, which is both where are we at in the national capacity versus where might we be at regionally in terms of the overall capacity, in terms of slaughter capacity. I think nationally, we've been in a situation where we are not tight capacity. And this differs significantly with where we were 3 or 4 years ago coming out of COVID and the backing up of beef animals coming out of COVID. I think that that has swung considerably. And even with the closing of the Tyson plant, we are not tight capacity. And so I think you can see that when you continue to look at fed cattle prices and feeder cattle prices, both that beef demand across the country has been quite resilient. And with that, without being tight capacity, it really puts the upper hand. The strength is with the feeders, not with the slaughter plants. And so, yes, the closure of that plant brings it more into balance. And yes, that probably means that producers in the region will have to go farther to get a competitive bid. So it definitely has regional issues. But overall, I think we remain in a position where we are tight cattle, not cattle slaughter. And I don't know if we'll get a turn in the cattle cycle this Friday or not, despite the strong profitability for cow-calf operators.
What happened with the cattle expansion back from 2023? We have cattle supply is lower for today's cattle trend.
Yeah, I think if we look back, so the cattle cycle, can be many, it has a range of the number of years, but it is years because it's a biological lag, right? Even if we saw a turn in the cattle cycle today, and by that I mean retention of additional heifers, that's not beef until mid 2028. That's not additional beef supplies until 2028. So setting aside live cattle trade with Mexico, everything else, it takes a long time for a turn in the cattle cycle to actually result in more beef. If we go back and we look at the last cattle cycle peak was 2019, and we began a contraction phase. And then I think that contraction phase was coupled by drought across the plain states. And I think you can really see that in heifer retention in 2022 and 2023. And those are the animals we would be slaughtering today, right? So those heifers not retained in 23 would be the animals that we're slaughtering, would be the cows producing the calves that would have been fed and being slaughtered today. So there is a long tail, for instance, to that faster contraction in 22 and 23 because of poor forage conditions. And I think producers look around today, they're looking at the economics of whether they should retain heifers. They're looking at forage conditions. They're looking at interest rates. They're looking at other market uncertainties. And there doesn't seem to be the enthusiasm to retain a heifer today that I might have expected given the profitability. But we will see if we get any early indications of a turn in the cycle on Friday.
Do you have any final thoughts about this planting intention report on March?
Yeah, so I think it'll be this will be a very interesting one given the ongoing, let's continue to watch the soybean to corn price ratio and what does that suggest for acreage mix. Again, we had record corn, or at least recent record corn acreage of very near 99 million acres. How much do we pull back from that? Do we pull back quite a bit? Does farmer bridge assistance and other programs like that incentivize even at the margin a few more acres? So I look at this and you can envision something perhaps in the 94 to 95 million acres of corn, and we will see what the market signals. Of course, as you know, the weather always has the final say in what will actually get planted, even with the farmers signaling their intention in March.
Thanks. Dr. Meyers, I've been honored to have you for today.
Excellent. It's been my pleasure. And if you want to get back together after the March report, we can dissect it and discuss what happened.
This is Dr. Myers at the University of Missouri on back roads of Illinois. The grains markets are quiet since the January report after the numbers were coming in from the Department of Agriculture. We were talking about technical aspects on the grains and livestock with Carl Selterz from Conus, and he is a Michigan cowboy. Hey, Carl, how are you, my friend?
I'm doing very well, Caesar. Thank you for having me.
Carl, let's talk about the fundamentals with the corn markets aftermath of the January report. What is your thoughts on the corn markets for fundamentals with these prices?
I'm keeping a real close eye on this corn market. We found some pretty good technical support underneath us at that 410 area. And then we rallied up 420 on the March contract, put in a double bottom. And now we're trading between that 420 and 435. The fundamental outlook of the market here really is a little bit more friendly than what the numbers indicate. There's the numbers in the WASD report, and we can come back to this, but I do think there's some very big question marks over the production side, especially this year with some of the outlying information we had, mainly the bridge payments and some of the acreage reporting just seems a little bit off. But the one thing I'm watching in corn is the demand side we're seeing. And that's from the global market. We've really removed Ukraine. They're not much of a corn exporter. And China, even though they produced what they're claiming to be a record 301 million metric tons of corn this year, bottom line is they're still importing feed grains, and that's really raising an eyebrow. Especially U.S. sorghum. They're a big buyer of sorghum, and today we had a big flash sale of sorghum to an unknown buyer. We also sold some corn to an unknown. So I'm not standing here and saying that is China, but it very well could be. There's a lot of talk in the market, Caesar, that corn demand is being front loaded, which means buyers are showing up now rather than later in the marketing year. I really don't believe that. I think our corn demand is going to hold in here a little bit longer than what some analysts are thinking, especially like I said, with China showing up for feed grains. China corn values are record high, and now we're starting to see some analysts walk back South American production. We'll have to see on the global side, but I do think our corn demand is a little better than we think, and I think our values will start to show it.
How is the reflection of the technical aspects on the corn markets with the March corn?
Yeah, we've found that support at, like I said, major support at 410, good support at that 420 level. We're just a touch above that here. Problem is we have resistance at that 430 to 435 mark. So we have a very tight range. I expect us to chop around in this technical range here at least through the end of the month, probably as we get into February, and we'll start to see a little bit more positioning as that contract gets ready to go into delivery.
How concerned about the supply numbers of the corn yield from the world supply? Could you tell us, does it concern you?
I think what we're going to see globally is we're going to see an uptick in demand. We're going to see an uptick in corn trade. Global corn stocks right now, they've been bumped up, but we've got to remember long term, our world corn supply is still about 5 million metric tons lighter than last year and about 15 million metric tons tighter than the year before that. So our corn supply is tighter than we have seen in recent years. And I think the market's overlooking that just a little bit. I think what it's going to come down to this year is logistics and where the corn is located and how much it's going to cost to get it to where you need it.
What is the feed demand for next couple months? We were talking about the fuel demand later.
Yeah, I'm looking at the feed demand. I think our feed demand is going to be a little better than what the USDA is projecting right now, Caesar. We're starting to see a few more placements. We're still down from last year, but we are starting to pick up a little bit. Our dairy herd has built. We added 9,000 dairy cows just in the last month, 220,000 dairy cows in the last year. So our dairy herd is expanding. And we're also seeing good corn demand in feed rations. Corn relatively cheap right now, so we're seeing a bump in corn consumption on that side. And on the global side, I think we're going to see corn demand hold in there pretty good as well. The ethanol side, we did see a big increase. The USDA projecting 5.6 billion bushels of corn usage this year for ethanol. That's up about 160 million from last year. I think the corn demand side is going to be okay with us from both feed and the biofuel. The thing is, we have to, on our biofuel, if we had a little bit higher blending rate substantiated, that would help as far as the ethanol demand. But as people travel and get out, I think it'll start to pick up when we get our spring travel. And of course, this cold weather does boost feed demand a little bit in these feedlots as cattle not only eat more, but you tend to feed them a little bit hotter rations when it's cold like this. So a little bit more consumption on the front side here.
Yes.
Yeah.
All right, you the Michigan cowboy. Do you have your cowboy hat on? What is your thoughts on the fats on February cattle?
I think we're going to see some, we're going to see some back and forth trade. February cattle holding in there pretty good. We're in that delivery, getting into that. But as we look out, looking out to April cattle, we're starting to see some strength there. And I think we'll see strength all the way around. We do see some setbacks in the cattle every now and then. But the big underlying factor is our U.S. cattle herd remains smaller than last year. Our cattle placements, while they've picked up a little bit, we're still down 5% from last year. And you look at the U.S. consumer holding in there pretty good on beef. We've seen some scaling back, but it's still not too bad. And the big thing is the U.S. beef supply. That came out here, the cold storage report last week, a little over around 430 million pounds of beef in storage. That's the least amount we've had in the United States in the freezer since 2009. So our U.S. beef supply holding as low as it is, we will keep a floor under the live cattle. I think it might be a little tough to extend it much more to the upside, but I think our downside risk is pretty limited right now.
How is the cash cattle side in the north, Carl?
It's holding in there pretty good. Cash cattle holding in. Show lists a little bit bigger in the south this week. That's not to be. It's not too surprising given the fact that we have the winter storms coming through on the northern parts. But I do think our cash cattle will hold in there pretty good. The inventory, like I said, the inventory just isn't there. Packers may soften bids, but when they need inventory, they're going to have to come back and buy them.
How about the lean hogs markets today?
Hogs, we've seen some good sized gains in, and that's coming from the same as the cattle. The U.S. pork supply really getting down there. Our pork supply in the United States is the tightest we've had since 1997, following that massive liquidation from the $5 hogs in 1995 into 96. So our pork supply getting way down there. And consumer demand starting to pick up on pork as well due to the price difference between that and beef. That does put a floor underneath our hogs. I think we'll have pretty good support in that complex. Even though we're overbought, we continue to see light buying in the interest in that complex. So all in all, hogs holding in there pretty good right now.
Do you have any final thoughts about database on the planting intention report on March?
I think it could be an interesting one. There's quite a bit of talk we could see more corn acres next year. Input prices are starting to ratchet up here a little bit. I think that's going to be a factor. Of course, springtime weather. It's going to be interesting if we see 100 million U.S. corn acres projected for plantings this year. I think it could be a little bit of a negative factor for the market. Question is how many of those acres will really be good, what you would call corn production acres. So the trade will start to look at that as well. And soybeans can't afford to give up too many acres. We could see a push back and forth ahead of that planting intentions, and especially afterwards for any uncommitted acres.
Thanks, Carl. I enjoyed our conversation, and the Bears is a great season for this year with Ben Johnson.
They did have a very good year this year. I tip my hat to them, Caesar.
Thanks. Again.
This is Carl Selterz from Conus Ag on Back Roads of Illinois.